Welcome back to another exhilarating episode of TQFM Trading Strategies, the channel that's your compass in the ever-changing seas of the financial markets. Our mission remains the same, empowering you with the knowledge and strategies needed to not just survive, but thrive in the trading world. In today's video, we're about to unleash a trading strategy that's like a finely tuned sports car built specifically for Bitcoin's 1-minute bar chart data on TradingView. It's fast, it's agile, and it's designed to seize opportunities in the blink of an eye. Picture this, 3 powerful indicators working in harmony, their signals synchronized to pinpoint those fleeting moments of potential profit. We're talking about Supertrends, Bollinger Bands, and the art of scalping. It's a strategy that's tailor-made for traders who crave action, excitement, and the thrill of quick wins. As we delve into this strategy, we'll dissect its core elements, revealing how to not only harness short-term fluctuations, but also to tap into the broader medium and longer-term trends. Yes, you heard it right. We're going to show you how to navigate the rapids of crypto's wild price swings with finesse. So, if you've been searching for a strategy that's as dynamic as the cryptocurrency markets themselves, you're in the right place. Buckle up, because we're about to dive headfirst into a world of trading where opportunity knocks every minute. First off, let's set up our indicators. Supertrend, 10 length, with a factor of 10 for medium-term trend identification. Another Supertrend, 10 length, with a factor of 30 for slow trend confirmation. Bollinger Bands, 20 length, with a standard deviation of 2 for short-term price volatility assessment. Our strategy revolves around using the Bollinger Bands to measure short-term fluctuations and the Supertrends to identify medium and longer-term trends. Here's how it works. In an uptrend, we're looking to buy when the price is near the lower Bollinger Band. This is our entry point. We aim to scalp a profit until the price bounces off the middle Bollinger Band, indicating the continuation of the trend. Conversely, in a downtrend, our selling point is when the price bounces to the top Bollinger Band. This is where we exit to secure profits. We'll wait for the price to fall back to the lower Bollinger Band to continue riding the downward trend. Now, it's crucial to manage your risk properly. You can either trade singular lots or use a pyramiding risk structure. Pyramiding involves adding to your position as the trade goes in your favor. Just remember to set stop-loss orders to limit potential losses. Let's look at an example trade to illustrate this strategy. Identify an uptrend with the Supertrend indicators and check that the price is near the lower Bollinger Band. Enter a buy position. Scalp for profits until the price bounces off the middle Bollinger Band. Secure your gains and set a stop-loss. Wait for another opportunity or re-entry. Now, before we rush into the exciting world of implementing this scalping strategy, it's essential to consider both the pros and cons. As with any trading strategy, there are potential benefits and drawbacks that you need to be aware of. Pros. 1. Quick profits. One of the most significant advantages of this strategy is the potential for rapid, short-term profits. Scalping allows you to capitalize on small price movements, potentially leading to numerous winning trades in a single day. 2. Risk management. The use of stop-loss orders is inherent in this strategy, which can help limit potential losses. When used effectively, it can provide a structured approach to risk management. 3. Adaptability. This strategy is versatile and can be applied to various markets and assets, not just Bitcoin. It can be especially effective in highly volatile markets. 4. Learning opportunity. Scalping demands that you closely monitor the market and indicators, which can be an excellent learning experience for traders, helping them become more proficient in technical analysis. Cons. High frequency and stress. Scalping requires constant attention to the market, often leading to high-frequency trading. This can be mentally and emotionally taxing, potentially leading to stress and burnout. Transaction costs. Frequent trading can result in higher transaction costs due to spreads, commissions, and fees, which may eat into your profits. Risk of overtrading. The excitement of quick profits can tempt traders into overtrading, taking excessive positions and increasing the risk of substantial losses. Small margins. Scalping relies on small price movements, which means that individual trade profits are often relatively small. To make substantial gains, you may need to take on more significant positions, increasing risk. Market noise. In the 1-minute chart, market noise and false signals are common, making it challenging to distinguish between genuine trends and random fluctuations. As you can see, there are both potential rewards and risks associated with this scalping strategy. Before you dive in, it's essential to assess your risk tolerance, develop a solid risk management plan, and thoroughly backtest the strategy to ensure it aligns with your trading goals and objectives. Keep in mind that no strategy is foolproof, and success in trading often comes down to discipline, adaptability, and continuous learning. So, as we move forward, remember to weigh these pros and cons carefully and tailor this strategy to your unique trading style and preferences. And there you have it. A scalping strategy tailored for Bitcoin's 1-minute bar chart data using Supertrend and Bollinger Bands. Remember, this strategy requires discipline, risk management, and continuous monitoring of the indicators. Before we wrap up today's discussion, I want to leave you with a crucial reminder about the inherent risks in trading. While we've presented you with a powerful scalping strategy tailored for Bitcoin's 1-minute chart, it's essential to recognize that trading, especially in volatile markets like cryptocurrencies, carries significant risk. No strategy, no matter how well crafted, can guarantee profits. Markets can be unpredictable, and price movements can change in an instant. What we've provided here is a framework, a starting point, but it's up to you as a trader to conduct your own tests, due diligence, and risk assessment. Always remember that every trade you make involves real money, and it's your hard-earned capital at stake. It's crucial to have a clear risk management plan in place, set stop-loss orders, and never trade with money you can't afford to lose. Furthermore, we strongly recommend consulting with a financial advisor or a professional before making any investment decisions. They can provide you with personalized guidance and help you align your trading strategies with your financial goals and risk tolerance. Lastly, if you found this video helpful and informative, please consider showing your support by hitting that like button and subscribing to our channel. Your engagement fuels our passion to provide you with more trading insights and strategies. And, as always, let us know in the comments if there are specific trading topics or strategies you'd like us to cover in future videos. We're here to empower you on your trading journey, and your feedback is invaluable. Thank you for joining us today on TQFM Trading Strategies. Stay vigilant, stay informed, and remember that knowledge and discipline are your greatest assets in the trading world. Until next time, happy trading.